When you take a look at the average American today, if you take a look at the last decade, in the late 90s, the average American was heavily involved in tech stocks, and then they got hammered when the tech bubble burst. Then they went into real estate, also back into stocks. They got hammered again with their homes. Their home values have dropped. Now Americans increasingly, I've seen the mutual fund inflows. They've been putting increasingly, literally, hundreds of billions of dollars into government bonds when interest rates are virtually near zero. And I read a report that the average American has over 90% of their assets in dollar-denominated assets. So the scenario that you're painting here, the road to hyperinflation and the collapse of the dollar, how does one protect oneself? Because the average American has over 90% of their assets in dollars. So what would you do to protect?
Well, if it's in a piece of real estate, that will tend to hold its value over time. You may have a period of liquidity, but if you can hold on to it over time, it will retain certain good elements of its original dollars in terms of purchasing power. But if you have it in paper assets, government debt, that will become worthless. What you need to do, if you're looking to preserve your wealth and assets against the sharp decline in the purchasing power of the dollar, if you want to preserve the purchasing power of your assets, the best bet that I'm aware of is physical gold, silver as well, and then getting some assets outside the U.S. dollar. Again, I like the Australian dollar, the Canadian dollar, and the Swiss franc. Getting some assets outside the United States if you have the ability to do so. The thing is, you want to have your money in hard assets or assets that are not denominated in the U.S. dollar. The dollar is what is going to take the hit here.
Basically, you want something that's going to protect your purchasing power. And, John, don't you think that's what we're actually seeing with gold? I mean, this will be the 11th year in a row, and on the day that you and I are speaking, gold is up almost touching its all-time record at almost $15.70 an ounce. Silver's over $36. In my opinion, it seems to me that gold and silver are taking on the role of currency of last resort, because it's not just Americans that are buying gold, it's Europeans, it's Asians, it's Latin America. This gold buying demand that we've seen, unlike any other gold bull market in history, is gone global. It's not just us anymore, or it's not just the Europeans. Isn't that what gold is telling us today?
Well, I think gold is telling in particular to watch out for the dollar, and watch out for the circumstance in the U.S. Again, the gold price you're talking of there is, where most widely is followed, is the dollar price of gold. I mean, there's an element beyond what's happening in the United States. You get all sorts of impact from political and financial instabilities globally, but there's an anticipation here that seems to be reflected in, particularly in the precious metals, of much higher inflation down the road. What I would caution here is that if you do this, if you look at holding some gold and silver as a hedge against the sharp loss of value in the U.S. dollar, don't be worried by the day-to-day fluctuations in it, because as the dollar goes here, I mean, you could see $10,000 gold, $100,000 gold, could see $1 million gold, but that's only reflecting how much the dollar's been devalued by. So you say, oh my goodness, the gold's at $100,000, I got it at $1,000 an ounce and made $99,000. You haven't made $99,000. What you've done is you've preserved the purchasing power of that original $1,000. You've lost the equivalent on anything that you didn't have in gold if you maybe had it in government bonds or such, because the dollar will have lost that purchasing power. It's an insurance policy here. This is not a day-to-day. There are people who trade it day-to-day as a commodity, and I mean, God bless them, that's fine, but that's not what I'm looking at. I'm looking at gold here as an insurance policy to get you through probably the worst financial times one's ever seen. If you're liquid and you've retained the purchasing power of your early assets, you'll be in a situation to take advantage of what will most likely be extraordinary investment opportunities. But you have to be able to ride out the storm.
Okay, it's been recommended if you read an investment book, you always hear this figure, and I don't know how they ever arrived at this figure, 5% in gold. But the kind of scenario that you are describing that will unfold in the future, John, if you have 95% of your assets in dollars and only 5% in gold, I don't think that 5% figure is going to quite do it. Do you?
No, I'd maybe have 5% in dollars. And you don't necessarily need to put 95% in gold, but, get some, and I'm not an asset allocator. I'm not an investment advisor. But I would look to, again, just in terms of what lies ahead of us, of trying to look to hedge the loss of the purchasing power of your currency, and that involves getting the currency into something other than paper U.S. dollars, gold, silver, foreign exchange. There are a variety of elements out there. Real estate, again, real estate's longer term. There are other things that over time will hold their value. But in a crisis, it's always good to have something that's portable and liquid.
I want to just let our listeners know you have done a rather lengthy study of hyperinflation. In fact, you have it available on your website, which I think bears a lot of reading because, John, the numbers, one of the things that you do in your service is the GDP numbers that we report, that the government reports, is overstated. GDP is actually, if you back out the real inflation from nominal GDP, we're probably in a recession. The inflation numbers we know bear no resemblance of reality, and it's amazing because they're talking about changing Social Security, the CPI, used in determining Social Security benefits. And then also the unemployment numbers that we hear given in the financial media each month, they're understated. So we're understating inflation. We're understating unemployment. We're really understating our budget deficit each year. And we're overstating GDP growth. And you have a primer on your site. It's called Primers on Government Economic Reports, and I highly recommend that our listeners go to your site and read these so they can understand, and I think they'll have a closer, understanding of why what they hear reported in the news and what they are experiencing on a day-to-day basis will make a lot more sense, because I'm sure our listeners are saying, wait a minute, I think the rate of inflation is higher than the 0.2% that we get reported by the Fed. Or if GDP is so great and we're growing at such great numbers, and they're projecting that, the one I love is they're projecting 4% economic growth next year. I don't know where that's going to come from. But if economy is growing and doing this well, then why are we experiencing unemployment rates that are anywhere from 9 to probably 18% today, if you talk about the uncounted, the unemployed, and the underemployed?
Those are all valid points. It is really an extraordinary and very unfortunate circumstance. What you'll see if you look at the hyperinflation report, at least it's discussed there, and probably is worth a little mention here, that hyperinflation in the United States will be particularly painful. You can look at a country like Zimbabwe that probably had the world's worst hyperinflation ever, yet over a period of years it continued to have a functioning economy. The reason it did was it had a black market in U.S. dollars, and so people would get paid in their rapidly deteriorating currency. They'd quickly go to the black market, lock it in dollars, and then they'd effectively come up with preserving the purchasing power of what they'd just been paid. We don't have a backup system here, and as such, without that, you could have very rapid disruption to the regular flow of commerce, to the extent that you see distribution disruptions to grocery stores and people don't get food. Things can turn very nasty very quickly. One thing which is interesting, I see Ron Paul has been working on this in terms of setting up silver and gold as effectively a backup currency. If it's exchangeable at market value, that would effectively provide a backup to the dollar. It would be like the black market of dollars in Zimbabwe. It would effectively enable the U.S. economy to continue to function. Shy of something like that, we're going to have one of the worst experiences anyone's ever had with a hyperinflation. I can't think of a circumstance where it's happened with the world's reserve currency.
John, as we close, and if I was just to sum up, if we get lucky, if we are fortunate enough that we could kick the can beyond the next presidential election, outside window, in your opinion, is 2014.
Yep.
And we could have something that we experience, it could occur at any time. I mean, we could have some kind of disruptive event where the rest of the world just, there's a run on the dollar. It could be a treasury bond auction where not too many people show up to buy our bonds, or it could be one country that says, you know what, from what I see going on in that country, get us out of our dollars and let's get into something else. But on the outside, it's 2014. In what you're saying, in contrary to a lot of investment advice, and I'd probably agree with you, most Americans have over 90% of their assets in dollars. They need to reverse that. So either they own hard assets such as real estate, land, bullion, gold, silver, hard currency bonds, but assets that are likely to maintain their purchasing power when the dollar eventually collapses. John, why don't you give out your website? And you've got two things I'm going to recommend our listeners go to your site to find out. On the front page, you have what is called a primer on government economic reports. And below that, you have a special report that you've made available, Hyperinflation Update 2011. So give out your website as we close.
Sure. The website is shadowstats.com. And those are in the articles you've mentioned are in the right-hand column. They're available to the public. We also have on the site links to graphs that show our estimates of where inflation really is, where unemployment really is, and such. And, of course, we do have weekly updates, and if anyone cares to subscribe to the service, we're always happy to pick up new subscribers, but there's a lot of information available in general to the public there.
And, John, just spend a minute. In your newsletter, what do you try to cover in your newsletter? In other words, a subscriber, what kind of information are you putting in that newsletter for subscribers? Tell our listeners about that.
Generally, I assess the latest economic statistics in terms of what they're really showing, try to assess what's likely to happen in the next week or two of reporting. And as we go along, I update the outlook with the hyperinflation report. Unfortunately, the developments since the last writing and even the writing the year before pretty much are in line with what we've been looking for. So that what you see in that hyperinflation report is still the current outlook. I tried to give people a realistic view of what's happening in the economy, net of the hype that you get out of Washington and Wall Street. And you do get a lot of hype there.
All right, John, your website once again?
Shadowstats.com.
All right. Well, John, I want to thank you for joining us on the program. I agree with your scenario. I hope we're fortunate enough to delay it till 2014.
I hope so. It's not something I'm rooting for, Jim.
None of us are.
It'd be great if we had someone in Washington that could really make the hard decisions. That may happen, and if we get through 2012, I don't think the election's going to go well for incumbents. Pocketbook issues tend to be driving forces behind elections, and things going into the 2012 election are not going to be better than they are today. They're going to be worse. Just a question of whether or not we make it to the election without getting into a full crisis.
All right, we've been speaking with John Williams. He's the editor and proprietor of Shadow Government Statistics, Analysis Beyond and Behind Government Economic Reporting, and you can follow John's work at Shadow Stats. That's shadowstats.com, all one word, and be sure to read his primer on government economic reports and the hyperinflation scenario that John and I have been discussing in this broadcast. John, thanks for joining us on the program.
Thank you for having me, Jim.
You can subscribe to Financial Sense News Hour in the iTunes and BlackBerry podcast libraries or at feeds.feedburner.com/FSN. Find more information about our guests at www.financialsense.com/newshour. Friend us at www.facebook.com/financialsenseonline. For our on-the-go listeners, you can access Financial Sense on your mobile device at m.financialsense.com. The Financial Sense News Hour is for informational and educational purposes only and should not be considered as a solicitation or offer to purchase or sell any securities.